All right, it does look like our thesis is playing out exactly as we predicted. This is the chart of the NASDAQ. The NASDAQ futures are now up 252 points, which indicates that we are going to get some kind of relief bounce. And Bitcoin is following suit now at 38,354. The big question is whether this relief bounce is just a dead cat bounce or whether it can be strong enough to get us right through into the next bull cycle or to continue the bull cycle. That's what we're going to be speaking about today. Also, is it time to start buying? And if it is time to start buying, what are we going to be buying? What are we going to be buying? What should you be looking at? What is the system that you're going to be looking at? And then I've got a whole lot of altcoin news. We're going to look at the time Wonderland debacle that's going on. We've got some Ripple news. We've got some Dogecoin news. So much more altcoin news. There's a lot happening in the show today. So make sure that you stay tuned and make sure that you stay tuned until the very end.
Get the fuck out of bed, bitch, go. Get up, get the guy, go. Gotta wake up, bitch, get up. Get up, get up.
Yo, Banter fam, welcome back. Another green day, 38,281. It looks like we're getting a relief bounce or a relief rally. And today we've got a full house back. We've got Sheldino Tentino sitting in the other studio. Sheldon, welcome back, brother.
What's up, brother? It's been a while.
It's so good. I'm so excited to combine the technicals and the fundamentals again. It feels like a long time since we've been sitting in the studios next to each other talking about the technicals and the fundamentals together. And today, the technicals and fundamentals are coming together beautifully because you've got the Fed announcement and you've got this relief rally. And then the big question is, of course, whether or not this relief rally can carry us through. What do you think? Is the relief rally going to carry us through?
I think we've got a job to do, but so far we're getting good signs. So we just got a job to do. It's been quite a month.
All right, so that's coming up in the show today. Also, if you haven't yet been to our website, get to our website, sign in with Twitter. We've created a Twitter-like experience for you guys. The whole thing is that it looks and feels and works exactly like Twitter. There's been some major alpha dropped on the website today. It started off with a new format that Fred's working on, and Fred's launched what he calls the Crypto Brew with Banter, which is kind of like a morning summary of everything that you need to know, technicals and fundamentals. And if you do read that morning brew, you pretty much got the whole day under control because it covered the FOMC meeting today, what we're expecting from that. It's covering El Salvador, Russia and Ukraine, and a whole lot of altcoin news. Also, there's been some amazing other alpha dropped on the website today. I did see an article about NFTs and whether NFTs are really bear market proof. So get yourself and go and have a look at that. Also, there was some breaking news dropped around what's happening with Wonderland and time. And that's what we're going to be talking about today. So it's going to be a huge show. If you're new to our channel, welcome. Subscribe to our channel. Join the fun and games here at the Banter Fam. Join the best crypto community in the world. Guys, smash that subscribe button because subscribers to the channel can get to win the Banter bags. And the Banter bags is actually becoming quite big. We've actually got a new Banter bags. A new protocol has given $1,000 to the Banter bags. And that's a protocol called Krida Fans. Now, what Krida Fans is, it's a fantasy football league, a fantasy sports league using NFTs. And it's launching on Polygon. They gave us $1,000 in the Banter bags. Their IDO is today, I think, on the 26th. It's today, 26th. So it's today on the 26th. They've put $1,000 into the Banter bags. It's a great protocol, great investors going into the Banter bags. Now, if you want to know how you can win the Banter bags, it's actually kind of easy. All you do, subscribe to the channel, interact with the channel as much as you can, and we will pick subscribers either from YouTube or from Twitter or from the comments. to win the Banter bags. And I think we've already chosen, 4 or 5 subscribers. And the Banter bags just keep growing and growing and growing and growing. Yeah, what else? Anything else? Oh, I'm thinking of a concept. Let me know if you like this concept or this idea for a show. Think of doing a call-in show where you guys get to call in and join Sheldon and I live on the show. So basically to get, the two of us and a couple of you live on the show, and we'll keep switching callers from the community in and out of the show. And maybe we'll do this once a week. Let me know what you think of the idea. Let me know if you think that you would call in if you want to get a chance to just join the show. You don't have to call in with a camera. You can just call in, just dial in and use an avatar if you don't want to expose who you are, if you don't want to dox yourself. You can just call in using a camera. Let me know in the comments what you think. Let me know in the comments what you think. And if you like it, well, then maybe we'll do it in the next couple of days. What else? Nothing else. Okay, well then let's get the show on the road. There's so much to talk about. I guess the big news is, let's get to the big news. The big news is this relief bounce, 32,282. And it looks like our thesis is playing out. It looks like the markets actually did overreact. Not only the crypto markets, but the stock markets too. You've got the NASDAQ staging a very good recovery. Now, the more encouraging thing about this recovery is that for 2 days in a row, we saw the stock markets dipping to low points and then essentially staging these huge recoveries. If you look at the NASDAQ recovered yesterday from 13,718 all the way back to 14,500 before coming down slightly. But what's happened for 2 days in a row is we've had the stock markets going all the way down and then climbing back up in anticipation of the Fed's meeting. And that is after a brutal correction that's happened on stock markets, which of course filtered into the crypto markets. And now we're starting to see that the market is coming into some kind of rationality. We're starting to see that rationality is starting to come back, and therefore the markets were probably oversold. And now the markets are coming back to some kind of reality ahead of the Fed's FOMC meeting, which happened yesterday. And I think in a couple of hours, Jerome Powell is going to come out and tell us exactly what went on at that meeting and what they see as the way forward for the economy. Now, I read this tweet today, which I think is a great tweet. I think it summarizes the Jerome Powell's conundrum. This is like the biggest meeting that the Fed's ever had, or specifically around crypto. It's one of the biggest meetings that the Fed's ever had. He said, tomorrow's Federal Reserve meeting might be the single most critical event in determining the future of the economy. Here's a breakdown as to why it's so important and why you should care. 2021 was a year of crazy growth. The economy boomed and everything went up from stocks to crypto. Economic boom sounds great, unless we take it too far and the economy overheats, which is exactly what happened. The Fed put in so much money into the economy and the economy started to overheat. An overheating economy is an economy that is expanding at a rate that is unsustainable in the long term. And you'll agree with me that when we look at the stock markets from last year, let's look at the annual charts. You can't tell me that it is sustainable for a stock market to go up as aggressively as the stock markets have gone up in the last couple of years, or in the last years. The overheating of the economy, an overheating economy is an economy that is expanding at a rate that is unsustainable in the long term. There are various flags for an overheating economy. The main one is inflation, which is what we're seeing. We're seeing a 7% inflation in the United States, and 7% year-on-year inflation brings us back to levels that we haven't seen for many years. As you all know, we've been witnessing a dangerously high inflation in the past few months. The Fed is now faced with a critical decision. Increase interest rates or keep them largely the same. And that's what this whole Fed meeting is all about. When is the Fed going to increase interest rates? By how much? And how aggressive are they going to be in their stance? On Wednesday, Fed Chair Powell is expected to signal to the market which way the Fed is leaning. The decision will be to fork between two entirely different futures. Future number one, do not raise interest rates. The engine keeps running and keeps overheating. More record highs for the S&Ps, stocks keep ballooning, asset prices keep going up, and inflation keeps ripping. Bread becomes more expensive, gas becomes more expensive, cars become more expensive, everything is more expensive. And then we get to the end of 2022 And then people say things like, remember when $100 used to be worth something? That's where we're headed if the Fed does nothing and increase interest rates. And I think that there's no chance that that's going to happen. The second thing is raise interest rates. Raising interest rates is an effective way to slow down the economy. The problem is it will deepen this dip and probably cause a recession. Here's why. And this is the analogy which I really like. He says, let's use the car engine analogy. When you're going at top speed, there's a chance that your car is going to overheat. A good driver will press the brakes well before the engine overheats and balance between the throttle and the brakes to keep the car going at high speeds without overheating. If the driver screws up, the engine doesn't. If the driver screws up and the engine does overheat, just hitting the brakes won't do it. They'll need to stop the car. Stop the car means to stop the economy or severely slow it down, which means a recession. Economists often talk about a soft landing. It means a slowdown of the economy without a crash. A soft landing is easier when inflation is controlled. Historically, a soft landing has been impossible since inflation has gone crazy. In short, if Powell signals that a series of aggressive interest rate hikes is coming, a recession is likely. At the end of 22, what we'll be saying is, I guess all bubbles have to burst at some point. Okay, so he's saying that, look, Powell's basically in this conundrum. If he doesn't increase interest rates, the economy overheats and inflation keeps rising. Not great, and especially since, if you think about it, the Fed's mandate is to manage unemployment and inflation. That's really what the Fed's mandate is. Or increase interest rates, but if it increases interest rates, since the markets are so sensitive to this increase in interest rates, then he could put the entire economy into recession. That is why this is the most important Fed meeting of the year. And in just a few hours, we're going to learn the outcome of that Fed meeting. The markets are usually right, and the market's telling you that they think that they overreacted, and they're starting to recover in anticipation of Powell's speech, which happens a little bit later today. I made a prediction. I said that Powell comes out and says as follows. Comes out and he says, the Fed acknowledges the nerves in the market. He'll probably come out and say, we have seen what's happened in the market. We acknowledge the fact that the market is sensitive to it. They mention inflation, but once again blame a lot of the inflation on supply bottlenecks. And that is because prices went up of stuff because during COVID, stuff wasn't manufactured. So the prices of cars went up because cars became more scarce because there were no chips that were manufactured during COVID. That's just one example. So there's not going to be an interest rate hike now. There's definitely not going to be an interest rate hike in January. I think everyone knows that. Interest rate hikes towards the end of the first quarter. So I think we're going to get an interest rate hike in March. And the tapering of the Fed balance sheet may begin later in the year, depending how the market responds to the interest rate hikes. That's what I think Chairman Powell does today. And that kind of aligns with Alex Kruger. He says the Fed only publishes their macroeconomic projections and infamous dot plot for interest rates once a quarter on March, June, September, and December. There's not going to be a dot plot this week. So he's also saying, look, interest rates, well, they're not going up this week. I think that's a given. Alex Becker takes a much more extreme approach, and he always takes a much more extreme approach. We know Alex Becker. He's a true degen. He's an extremist. He speaks his mind. He's a loose cannon. He says, controlling inflation via rate hikes is the priority of a responsible government that has the country's best interest in mind. This is literally not our government. They are going to kick hikes past the midterms so they can blame the big recession on the incumbents. So he's saying it's all going to be about the elections, and they're not going to increase the rates before the election. So, and he makes a prediction. He says, rate hike will be kicked out till after the midterms for political reasons. Massive blow-off top cycle starts. Then the bull on all this shit comes due to an entire bubble implodes into a bigger disaster than 2008. Don't keep your, I can't say it because YouTube will take me off, on the pencil sharpener for too long. So everyone's making predictions about what's going to happen. I think that the Fed will be responsible, but I do think that, unfortunately, we are going to go into a period where the Fed is going to start increasing interest rates and stop putting money into the economy, and maybe even start taking money out of the economy. It's only logical. It's only rational that that's what they're going to do. You cannot keep pumping money into the economy, and you cannot keep running an economy at 0% interest rates and at negative interest rates for such a long period of time. So, but what does this actually mean? Because a lot of people have made that, if the Fed starts to increase interest rates, then it means the end of the economy. It means that's it, like no more economy. It means like the economy stops and we go into bear market. And the truth is that that's bullshit. That's bullshit. If you look at the data, and again, we've got to look at data. And Lark Davis pointed a very interesting chart. He says, this is a very interesting chart. That's what I said. That's what he said. It's a very interesting chart. Really puts periods of Fed interest rate hikes into perspective. So he breaks it up into rate hike cycles and rate cut cycles. So what is a rate hike cycle? A rate hike cycle is a period of time where the Fed increased rates. And he breaks it up into the periods of 1989 to 1994, which was a period where the Fed increased rates. Then 1995 to 1997, reduced rates. Then 1998 to 1999. Then 2001 to 2004, 2007 to 2008. And he points out that even in times where the Fed hikes rates, which is what they did, there is still great growth in those periods. So in rate hike cycles, there's always been great growth. And the great growth is dispersed amongst not only technology stocks, but also normal stocks or industrial stocks. So you can see that it's rate hike cycles doesn't mean that all of a sudden the economies are going to stop. It means that the economies are going to have to readjust, and we're going to get some growth, but it's not going to be aggressive growth, and it may be in other sectors of the economy. It certainly doesn't mean that the economy is just going to stop and that's the end of the economy. It just means that different stocks are going to perform, different asset allocations are going to happen, but the economy is going to continue to grow. And effectively, what he's showing in this is that on average, in rate hike cycles, you're getting great growth regardless of it. So that is, I think everyone's starting to panic. And I think that now this panic has started to be drawn in, and now people are starting to come back into rationality. And that is why we're seeing a relief bounce. So that's what we do. We look out for Chairman Powell's speech later today, and we trade according to Chairman Powell's speech. Now, as we said, we think that this relief bounce is going to continue. And for crypto, there's another factor that may continue this relief bounce all the way to 42,000. And we could have the 42,000 as early as Friday. So we could continue this relief bounce that we've had from $33,000 just a few days ago. And we're going to talk about that because the number went up very quickly. So from 33,000 just a few days ago to 38,000 today, I think that this bounce could continue. And the speed and momentum of this bounce could also continue. And that might even take us into a $42,000 Bitcoin price by Friday. And I'm not just thumbsucking a price of 42,000. This 42,000 is actually based on certain data. And that data is this data over here. Now, I always like to show you guys the data. I don't like to just make calls. Every time I talk about something, I want to talk to you guys and I want to show you guys the data which I use to make the calls. What we know, listen to this. We know that every Friday we have an options closeout. And we know that at the end of the month, it's the biggest options closeout of the month. And this month is no different. We've got the biggest options closeout of the month. And the point of max pain is where the price usually closes at the options closeout. And the point of max pain this month, as at today, now remember, this point of max pain can change between today and tomorrow. It can change. It's a dynamic number. But right now, as it stands, the point of max pain is at 42,000 on Bitcoin and at 3,100 on Ethereum. So If we can continue this momentum, and it does make sense, because if you look at where we were just a day and a half ago, we're at 33,000. Now we keep this momentum, you keep this momentum, and all of a sudden you're at 42,000 in the next 48 hours. If we can keep this momentum, and if the Fed come out with a good sign, which is what the options traders are telling you, then we may actually get this 42,000 point of max pain. So TED Talks Macro says, max pain at Friday's month-end expiry right now is 42,000. That's where it stands right now. Now, if you follow me on Twitter, I'll keep updating you on the point of max pain, but you've got to watch the point of max pain, because 9 times out of 10, the price tends towards the price of max pain. And the point of max pain is, I want to explain this to you because I think it's super important for you guys to understand this point of max pain. He explains it so well here. He says, the point of max pain is often talked about and is made out to be quite complex. So let's make it quite simple. The max pain price refers to the option strike price for which the most number of options will expire worthless. Follow the thread and you may learn something. Now, I love this. I love this. I love how he explains it. He says, the max pain theory suggests that the underlying asset price, e.g. the price of Bitcoin, will gravitate towards the max pain price in the options expiry. The theory behind this is the typical market maker attempts to remain hedged against their open interest. When a market maker deals a call or a put, it is in their best interest to remain hedged in that position. They do this by longing, shorting the futures market, for example. Now, I'll show you an example here. Here's an example. TED buys a call option at Ethereum's price of 2,600, same as the spot price, expiring on May 28. TED pays $200 to the market maker for the option. If the price on May 28th is 3,600, the value of the option is $1,000. So the market maker loses $1,000 less the money that they charge for the option, which is $800. So $200. So the market maker will lose $800. If the price is below the strike price, so let's say the price goes to 1,600, the value of TED's options is 0, and the market maker makes $200 for the contract. So you can see that there's a large incentive for market makers to manipulate the spot price closer towards the point of max pain. You got it? So all this is the market makers playing a game to get the point to the point of max pain. And this week, the point of max pain, as it currently stands, is 42,000. So that's the first sign that we see that Bitcoin may actually continue this rally to $42,000. Then there is another sign that's showing us that Bitcoin may continue this rally into the $42,000. And that is that there are a lot of people taking short positions. There are a lot of people taking short positions right now. This is the funding rates, and the funding rates here have gone negative and remain negative for a long time. Now, when funding rates go negative, what that means is that shorters, people who are taking short positions, are taking money they borrowing money to use for the short position. That's what happens when the funding rates go negative. So yeah, I'll read it out to you. It says, negative funding rates indicate that short position traders are dominant and are willing to pay long traders for leverage. The third sign that we have that we are about to see a massive recovery is the RSI, which is the sentiment indicator. It's a relative strength indicator. It's a sentiment indicator. And we can see that the RSI is at a point where it completely oversold. In fact, I don't think it's been oversold for a long period of time. So that's the third sign that this market may actually continue recovering to about at least 42,000 or around 42,000. So that's the theory behind it. But let's actually get Sheldino back on the show and let's see what the charts are telling us. Sheldino, what do you think? 42,000 or no 42,000?
I do think we go to 42,000, definitely. I think it is very important for us to break 42,000 though. I really think it's a key level. I think we are going to get there. A lot of data is showing that. It's showing our next resistance is at 42. It's showing our trends at 42. And one thing that is quite interesting, you were speaking about RSI, and the last time obviously was the May drop last year that we were sitting in these really low sort of territories. And before that was the March crash. So the last times we were at these levels were obviously the massive big corrections we've had in the market. But what I do like here is that we are starting to get to a point where we're getting to a near break of trend with the actual RSI. So as you can see with the daily, the daily starting to show some indications now. We are starting to break trend on the daily RSI. So this is good news. It looks like we are going to, get to a point of a higher high on the RSI. But we do need the chart and we need the price to match that too. So I agree with you. I think 42K is in play. I do want us to break that though. I really want us to get to 46 somewhere there. Just because if we don't break that, at any point we can possibly come back to the 37. We don't make the higher high. We know about the lower low. So it's important for this breakout.
So you're saying 42,000 and above is a higher high. If we can break 42,000 and we can convince, we may be back on track for a bull cycle, right?
Yeah. So the break of 42, we do want to get to around 44, and then that's the first higher high in a long time. Since we've actually started this downtrend, it's the first real higher high and a reset RSI. So we're getting the first indication. Remember, we had this indication the last time where it was this long trend. Let me see if I can find it here for us. It was this long. Let me get it. This long one over here. Let me just. There we go. So that long downwards trend, this was the reversal. So this was good. So now we get into that point where we have this long trend over here and we're getting close. So, a break of 42, it will get to that trend. And obviously we break through 42. We have the RSI breaking out. Very similar. You can see where it broke out. It was literally this breakout here. And what happened after that. So, we're at a critical level. And I think Bitcoin really needs to break that 42 zone.
Okay, what is the Bitcoin dominance chart showing you? Because the dominance, you called the breakout on the dominance. We got the extreme breakout of the dominance. In fact, there's your lines. I mean, I can't argue those lines. There we go. You had the perfect retest, and now you've got the dominance going up. How do you see this chart playing out?
So I think it's going to stay upwards until Bitcoin gets at 42. You see, we break through it, confidence is back in the market, they're willing to diversify. Just because Bitcoin dropped so much, it's just why they're still nervous with diversifying into alts right now. And it's just because Bitcoin's not past that critical level. So I see this rallying up until Bitcoin gets to the 42K mark. And obviously, breaking through that or anything like that, then I'll see a reversal. But remember what we spoke about, the days of dominance going to 50%, I don't think are there anymore. So I am seeing, 44, 45%, get Bitcoin to 44, 42K or anywhere above. And then I think the confidence will come back and we'll start having a bit of an alt catch up.
Amazing. Okay, we've got someone else on the line. Crypto Face, welcome back, my friend. How are you?
Oh man, cue the music, baby. Where's the Banter party music, bro?
What's up, brother?
What's up, Mr. Crypto Face? There's the music for you, guys.
Man, thank you. Man, thank you for having me. It's good to be back. It's actually my birthday today. I got my check mark on Twitter, so I'm official.
Happy birthday, brother.
Happy check mark on Twitter day, bro. Happy check mark.
Yeah, man. Thank you.
Man, we haven't
your
had
guys'
you.
new studios is I try not to curse. Is really cool too, man. So you guys are kicking butt, dude. I come to you guys for like my altcoin, and I'm not making this up. I'm not just like shilling for no reason. But like when my friends come to me asking me like where I get my altcoin info, I've missed out on so many coins that you guys have talked about, and like there was a point where I'm like, okay, like the next 2 or 3 coins he talks about that I've never heard of, I'm gonna go into. There was like Phantom and 2 others, man, and it paid off. So
They did pay off.
to you guys, man.
All right, let's look at your views on the market. I remember we had you last time. You called it spot on. What are you looking at now? Let me know if you want to share your screen. Let's see how you're looking at the charts.
Yeah, let me okay, so share screen. Okay, I'm clicking the share screen right now. And boom. By the way, I'm sorry I'm not on video. It's just I'm in 5th gear full degen iguana-eyed on like 3 different charts. So I've been hammering long all night. Are you able to see my screen right now?
We are. We see your trading screen.
All right, sweet. We're up like a little 80K rate here, so nothing too bad. A little over 2 million still in the position right here. So just to brag a little bit. But man, I love your guys' analysis today. So I definitely think I can kind of just reinforce what you're talking about. So for me, I entered my longs mainly off of two things. Number one is off the daily chart. So these two squiggly lines down here, these are actually two different RSIs, my own kind of versions that are like color coded. And what I noticed was they're on a 0 to like 100 scale right here, right? And they're super, super low down here. So I'm like, well, when was the last times that the RSIs were this low and looked similar? And so I went back and marked each time. Here was one time, right? Went super, super up right there. And then I went back, and it's literally hasn't happened since 2019 in October. Boom, there was one. That one ended up pretty darn good, if you ask me, right? It wasn't like the end of like the overall macro, but these are like big relief moves. That one was, almost 40%. Even back in 2018. So like this doesn't happen often, you know what I mean? So when something like this lines up, like I just felt I had to roll a little bit of the dice. So even here, like the RSIs came, this was December 2018, hit it twice, and the trend to me is like it's basically been a bottom indication, even if it stays there, and then boom, right here, this was up 34%. Eventually, that was, I believe, the beginning of, the trend up to 14,000 there. And I think there's one more time right here. This is in 2018, right? Still a little bottom. We're on the daily, but boom, eventually it came up 40%. And I mean, even
is the whole narrative here around sentiment? Is the whole narrative here around, because RSI is actually a measure of, it's a stochastic, it's a measure of sentiment, right? So is the whole narrative here around sentiment being at the absolute bottom, being at a point of extreme fear, and that is the time to actually get in?
Well, there's a lot more people like overall in crypto right now, and whether you call it sentiment or even just money, like I attach the two together. Like right here, this red and green wave is a money flow, tracks the money in the asset pair, and it's deep in the red. You know what I mean? And so yeah, like when that's when people are scared and when people have sold. I mean, the price has come down from 69,000. We've gone down 50%. So even if you sold anything up here, like if you get back in anything above, you've done good. We might have, time has to go by though. I think another thing is on the 6 hour. Also, what I like is the RSIs. When these and these are two separate RSIs. It's not a normal RSI where they cross over. And basically, when these two RSI lines are closer together, when they're close together in an uptrend, the uptrend is stronger. When they are spaced apart, it's weaker. So like right here, right? These two RSI lines are far apart. Yes, they were going up, price came up a little bit, but boom, got cracked right back down. Even if you go to like when we were at the top in the 60, whoopsie daisy there, in the 64, 69 Ks, the RSIs farther apart. It was having a hard time, got cracked down. But I'm kind of liking this 6 hour money flow is creeping up a little bit. And as far as like the 42,000 target, my trend lines like this, like my two targets are like 40,800, 41,000. And then the only two difference between these two is one's log and one's not log. And then like 43,000. So 41, 43, 42, it's all right there. So that's kind of what
Alrighty.
And
so your charts are actually showing the same as what our thesis is showing. Three different analyses, plus the point of max pain on the options, all coming back to 42,000, and pretty much in the next couple of 48 hours, right?
I hope so. I don't know if I could say 48 hours, but maybe this week, man. It's certainly possible. Like if you just go back, we're on if I go to the daily, each daily candle. This has a few days, like our VWAPs coming over right here. If we just measure this and see how many candles that is, 1, 2, 3, 48 hours, 72 hours, same damn thing if you ask me. 2 days in a week, same thing, crypto. So, man, it would be awesome, and hopefully I stay in this trade because what's the percentage if we go to 41,000 is almost, we're looking at like a 10% gain, and that's huge, man. So
that is huge.
I'll be able to scoop that up. You know what I'm saying?
That is huge. Alrighty, great. Crypto Face, it's been so good to have you back on again, my man. So good to get your energy. So good to have your voice here, buddy.
Thank you. I love you guys. You guys are so awesome. Thank you so much.
Thank you, buddy. That's a true degen. But he's a Bitcoin degen. He's not an altcoin degen. He's a Bitcoin degen. Alrighty, let's carry on. Let's just see where we're at now. The Nasdaq still carrying on its rally. 14,500, give or take. Bitcoin still holding strong at 38,234. And I guess what we're seeing here is we're seeing the speed and the momentum of the bounce. It's the speed and the momentum of the bounce. And that is why over the weekend, or a couple of days ago, I tweeted something. I said, the main thing right now is that you need to stay inside the market. The biggest mistake that you can make in a market like this is to try and exit the market on the way down because you're scared of what may happen, and then you're going to miss the bounce. And that, I must say, that's exactly what happened to Fred. Let's see if Fred's here. Freddie. No, he's not coming on the stream. So Fred was in stablecoins. And I said to Fred, you cannot be in stablecoins right now because you're going to miss the bounce. And the problem is that if you were out of the market, you missed this aggressive bounce, which is why it's so important in times like this to actually just zoom the fuck out. Just zoom out, relax, look at the macro indicators, which is what I kept trying to drive to you guys, and then make decisions. So I love this tweet from James Lavish. He says, people are asking if I'm beginning to panic in this market. He says, I've been investing for 25 plus years. I saw the 1998 long-term capital management meltdown, the 2000 tech bubble burst, 9/11, the 2008 great financial crisis, and the March 2020 pandemic, and some volatility in Bitcoin. Just another day at the office. And that's exactly it. When you start zooming out and you look at the volatility in Bitcoin, this volatility is nothing in the big scheme of things, which is why I said that the best trade right now is to make sure that you stay in the market. Don't get out of the market. Stay in the market. Don't sell unless it's to switch. And I'm going to show you in a few seconds how I'm doing my switching strategies. Dollar cost average into quality. And what I started to do here was I tweeted yesterday or day before. I said I'm starting to trade as if we were near the bottom or actually past it, because I felt that we got to the point where the market had to turn. And I kind of deployed everything that I had. I told you guys I took a leverage long on the Nasdaq, and I started to deploy longs on Bitcoin and a whole lot of altcoins, because it felt to me as if we had bottomed. That if you do bottom and if you can keep a cool head, then basically all you're looking for is you're looking at narratives. You're looking at the narratives that you think are going to recover and the narratives which are going to recover the quickest. And a lot of those narratives that we have been speaking about are actually recovering and have actually recovered the quickest. So if you let's look at some of the narratives that have recovered. Let's take our crypto portfolio. Let's see if we can get our actual portfolio here with if CoinGecko will actually play ball with us this time. Let's see. So, and now let's see if it plays ball with us here. This is actually the most important part. If it will actually sort them. No. There we go. Okay, so if you look at the narratives that are actually starting to recover, what you'll notice is that things like Phantom, Tomb, T-shares are recovering because the whole narrative of layer ones isn't going away. So if you look at the Solanas and you look at the AVAXs, they're having strong recoveries. Not only are they having strong recoveries, but those are the type of tokens that eventually they're going to recover. They're not high-risk tokens. Avalanche, Phantom, Solana, Ethereum, those aren't near protocol. Those aren't high risk things. So in times of panic, the great trade is to put money into those layer one narratives because you know that they're going to recover. So if you've called the market wrong or if you've timed the market wrong, well, it doesn't really matter because then you'll just sit it out for a little bit longer. If you time the market wrong on Ethereum, you know that eventually, if you have to wait a week, a month, a year, Ethereum will get to a higher high. Ethereum will make higher highs. So the idea is to start deploying capital into the narratives that you believe in and into the good quality coins inside those narratives that you believe in. And a lot of our narratives are playing out. Our layer one narrative is absolutely playing out exactly as we predicted. We're also getting a second narrative that is playing out, and that is this narrative of decentralized stablecoins that are not dollar-backed or asset-backed. DeFi needs massive stablecoin growth to see TVL to the point that cryptos can break free of legacy markets. This comes from a Bianco Research. What is that report? We believe that this can only come about from decentralized crypto algo stablecoins getting mass adoption. And what it shows here is it shows the charts of the adoption of stablecoins. So it shows the growth of the parabolic growth in algorithmic-based stablecoins, the decline of USDT Tether in terms of dominance, and the increase in USDC and algorithmic-based stablecoins. So that's one narrative that we're following. Now, if you are following that narrative, then putting money into Luna at the $60 price level would have been a great bet. If you want to go a little bit more risky in that narrative, well, then go into things like Vader, because Vader has similar qualities to Luna. It did become quite cheap. I did follow it. It did actually become quite cheap. I think it went to about 0.05. Let's have a look at that. 0.05, so almost 6 cents. If you believe in that narrative, then maybe that is a good one to play. The other one, if you really want to take some risk, is the UXD Protocol, which is the UXD stablecoin that is on Solana. And remember, that's a stablecoin that is not backed by money. It is backed by zero-rated, delta-neutral option strategies. So that is the UXD protocol. So I went and started to buy into that narrative. Another narrative which we've been playing on the show, which is what I started to buy near the bottom, is I started to buy the privacy narrative, because I think the privacy narrative is one that's going to have a big run in 2022. I think privacy has been underplayed in the earlier stages, and the reason why privacy has been underplayed in the earlier stages is because we first had to build layer ones, and we had to get the blockchain working. And in the beginning of blockchain's life, blockchain was used primarily for illicit activities. And so this whole notion of privacy was almost like frowned upon. But the reality is that you can't really have blockchains without privacy, because a lot of applications around blockchains require privacy. If we're going to get institutions, if we're going to get big corporates to use blockchains, they're not going to want us to see where, or for everyone else to see transparently where they're buying their stuff from, how much they're paying for their stuff, how often they're paying for it. And also there's a lot of applications on blockchain that can't really be built without privacy layers. So imagine a decentralized Uber on a ride-sharing service on the blockchain, a completely decentralized one. Well, if there was no privacy, you would know exactly where every rider is and where they're being picked up from, which kind of sounds crazy. So the narrative of privacy is another narrative which is playing out. And if you are bullish on the narrative of privacy, well then, we had the guys from Secret Protocol on, and that was another one which I scooped up at about $5 near the bottom. It's now trading at $6.53. That's another one that you want to be buying. If you want to go slightly riskier on the narrative of privacy, well, then one that I recommend is Tornado Cash. Because Tornado Cash, I don't think many people understand how powerful this protocol is. If you use your Ethereum wallet or your Ethereum to pay for anything, even a cup of coffee, that person can see every single transaction that you've ever made in your wallet, which is kind of impractical. I mean, you're not going to go and pay for a cup of coffee, and the coffee barista is going to see every single transaction that you've ever made. And that's what Tornado Cash does. Tornado Cash mixes the transaction and makes it a completely anonymous transaction, so no one can track it back to your wallet. Now, to me, that's a fundamental building block of blockchain. And even though the privacy narrative hasn't yet taken off, well, I think that Tornado Cash may be another one. So Secret and Tornado Cash were in the realm of privacy. In terms of gaming, well, if you are into gaming, you can always go into Hustle's recommendations. Hustle made 6 calls yesterday around gaming recovery recommendations. And those gaming recovery recommendations that Hustle made on the website a few hours ago are flying. Let's have a look at them. So you got Gala Games. Let's see what Gala Games done in the last 24 hours. Up 22%. That was since Hustle's article yesterday. Then we've got Immutable X, also on Hustle's on list from yesterday, up 27.5% since yesterday. Then you've got Ultra, UOS, which Hustle called yesterday, up 21%. Then you've got Phantasma or Sol, which Hustle called yesterday, up 22.6%. So if you had just gone to the website, read this article, he would have given you 6 picks where on average, you would have made yourself 22.5% return just by reading this and calling and backing the narrative. And that's effectively what we're trying to do. We're trying to make sure that you stay in the market, especially when it feels the most uncomfortable to deploy. So that's the time when you want to stay in the market. And when you stay in the market and you zoom out and you say, look, I know these narratives are going to play out. I just don't know when they're going to play out. But I know for sure that privacy is a narrative that I want to back, that algorithmic stablecoins are going to back, is a narrative that's going to come back. Layer 1s is a narrative that's going to come back. Gaming is a narrative that's going to come back. If that's your thesis and you ride that thesis and you zoom out and you put on your big boy pants and you say, I can stomach the volatility, well, then you get a chance to buy at the bottom. And that's exactly what we did yesterday. We made it pretty public that we were doing it. We did it. And for those of you that followed, great. For those of you that didn't, you may want to do an exercise like we've been doing. And I mean, don't look at the individual coins, because I think the individual coins are not really as important as the principle. But essentially how we build portfolios here is we take and list all the tokens that we're interested in buying. We take and list all the tokens that we're interested in buying. And you've got to have a strategy. You've got to have this kind of strategy where you actually write down your portfolio. And then you look at your current portfolio and you say, how badly do I need this token in my portfolio? Now, a lot of the stuff, the red ones, I don't have enough of in my portfolio. And so I'm much more aggressive in buying those. And then I look at how much they've fallen from the all-time high and how much they've bounced from the low. And the idea is to find the ones that came from very high and went very low, but haven't yet staged the recovery. So here's a good one that you can see. Astroport. It is 54% from its high, and it hasn't bounced yet. It hasn't bounced. So if it hasn't bounced, well, those are the ones that you want to be buying. So you want the ones that haven't yet bounced, and you want to start buying those in the narratives that you believe in. So that's pretty much how we're going to do it. And when we think it's safe for you guys to start buying into the market again, we'll start sharing with you individual portfolios like we did last year, where we gave you guys individual portfolios. And yeah, those portfolios, I think, performed pretty well. Anyway, there are a couple of other pieces of news that I want to cover. Most of them are covered on the website already. But anyway, let's quickly look at them. I don't know if you guys saw this, but El Salvador, the IMF is now urging El Salvador to remove Bitcoin as a legal tender. And they're doing this because they're worried that other countries will follow suit. Of course, they're worried that other countries will follow suit. Remember that a lot of these countries take loans from the IMF. And when they take a loan from the IMF kind of holds them by the balls. Because if they do anything naughty, the IMF says, look, we're going to withdraw the loan. But El Salvador has actually got one up on the IMF because they've started to do Bitcoin-denominated bonds or loans. So, I mean, this is going to be interesting as to how this pans out. And Nayib Bukele, I mean, this is the president who's dropping this at the IMF. Crazy guy. But love the guy. Other news today, Ripple. Ripple. We don't talk enough about Ripple. But I think that the SEC case against Ripple may have taken a big hit today. And that is because the Ripple community have gone and trolled through thousands of hours of SEC videos and stuff like that. And they found what is, in my opinion, a piece of gold. They found a nugget. And you'll remember that the SEC said that Hinman, who was the ex-head of the SEC, when he spoke about the SEC's criteria for securities, he was speaking in his own capacity and not in the capacity as SEC chair, and not on behalf of the SEC. And that was actually what Jay Clayton, who was the next head of the SEC, said. But then someone dug up this video. Now listen to this.
Recently outlined the approach we take to evaluate whether a digital asset is a security, and I encourage you to take a look at Bill's speech, which is available on our website.
So he says the we word. He says, we recently highlighted the criteria we use to decide if something is a security, and I encourage you to go look at it on our website. Listen to it again.
Bill Hinman recently outlined the approach we take to evaluate whether a digital asset is a security, and I encourage you to take a look at Bill's speech, which is available on our website.
I mean, that's a slam dunk. When the chair of the SEC gets up and says that we recently highlighted. And so Ryan Selkis, and I don't think that Ryan Selkis is the biggest Ripple fan, says the SEC case against Ripple is over. And he points to this thread. I mean, that's a great thread. Also, I don't know if you guys saw this tweet from Elon Musk that says, I will eat a Happy Meal on TV if McDonald's accepts Dogecoin. And there's been a whole Twitter war about that. It says, Burger King says, only a king knows what the coin do. And McDonald's says, only if Tesla accepts Grimace coin. So I don't know, Elon Musk is actually taking this Dogecoin thing quite seriously. I think he's made it into a pet project of his. Anyway, I think that is it for today. Let's quickly take a look at the markets again. NASDAQ now open, up 1.5%, 14,421. Bitcoin continuing at 38,000. All eyes are on the Fed and Powell when he comes out and speaks in a couple of hours. I think that's in about 3 or 4 hours. We'll keep you updated here and on the Crypto Banter website. And if you're not on the Crypto Banter website, guys, you're just missing alpha. There's just no other way to say it. You're missing alpha. You're missing alpha. So many cool articles here. So many cool articles here, and more coming out. There'll definitely be an article here as soon as the Fed speaks this afternoon. So go in, log in with Twitter, have an amazing experience with us. Give us feedback if there is any feedback. Also, give me feedback about whether you want that show where you guys can call in with me and Sheldina. So maybe we'll just grab a day, do an hour show where you guys can hop on and off the stream and we can just chat crypto with you guys, the community, and we can do it live. See you guys later. We'll keep you guys updated when the Fed does their announcement. Follow me on Twitter. That's where it's going to break. See you later. Until then, traders. He's here. What a great guy. He's so good.